Hello viewers, welcome to my channel. I'm Hashim Ali Khan here. I'm giving the lectures on the subject income tax 2. In this subject, the topic is capital gain. How to compute income from capital gain. I have already uploaded the theoretical part of this topic, capital gain. And also two main problems I have solved on computing the income from capital gain. Hope my regular viewers have already watched those two videos, got the command how to compute the income from capital gain. Now I'm going to start the next sixth problem. Five problems we have so far completed. Now I'm starting the sixth problem. So before starting the sixth problem, I expect my viewers to have a hard copy printout of the problems. The problems are provided in the link under my description. So take a printout of the problems and keep it ready before watching the video. And for those viewers who are first time on my channel, I suggest you to visit the playlist of my channel. I have uploaded a number of videos on different subjects, different topics. Select your subject, select the topic and watch the video completely till the end to get a complete knowledge on your subject. Now, I am going to read out the sixth problem. Carefully listen to the problem. Mr. Chari sold his residential house for rupees 26,50,000. So, Mr. Chari, SSC, he sold the property, residential house for 26,50,000 on 10th August 2018. Remember, our previous year is 18-19. 2018 to 2019. 1st April 2018 to 31st March 2019. This is our previous year. So any asset sold, transferred during previous year is assessed to tax in the assessment year. The assessment year is 1920. 1st April 2019 to 31st March 2020. So on 10th August 2018, cost inflation index 280. So current previous year index number is 280, which he purchased on 5/11/1988. That means the asset is purchased before 1/4/2001. The income tax provision has been given. If any asset is purchased before 1/4/2001, SSC can choose the actual cost or FMV on 1/4/2001 as the cost of acquisition. तो अगर कोई SSC एक asset 1/4/2001 से पहले अगर खरीदेगा तो he can choose higher of the following two as the cost of acquisition. Which are the two amounts? Actual cost or FMV on 1/4/2001. Whichever is higher, that will be taken as the cost of acquisition. Here the SSC purchased on 5/11/1988 for 1,02,000. Fair market value on 1/4/2001 is 8 lakh. See here, FMV on 1/4/2001 8 lakh, whereas actual cost is 1,02,000. So the SSC definitely will choose 8 lakh rupees. In this case, if he choose 8 lakh, his tax liability will get reduced. Otherwise, if we go for actual cost 1,02,000, SSC's tax liability will increase. So every SSC will have a desire of reducing the tax liability, not increasing the tax liability. Everybody wants to reduce the tax liability. So definitely he will choose 8 lakh. If selling expenses are 2%, compute income from capital gain and tax liability if income from other head is nil. So we are required to compute the income from capital gain and tax liability. There is no other income of the SSC. Now see here. Computation of LTCG of Mr. Chari for the assessment year 2019-20. Consideration received 26,50,000. At this price, the SSC sold the asset. Less transfer expenses or selling expenses. It is given 2%. So 2% of 26,50,000, 53,000. Subtract, you will get net consideration, 25,97,000. Less indexed cost of acquisition. Cost of acquisition, just now I told the SEC has purchased the asset before 1/4/2001, so he can choose higher of the following two, actual cost or FMV. So he has chosen FMV 8 lakh. So 8 lakh into current year index. The current previous year index always will be 280. Remember, numerator. Denominator, index number of year of purchase. The purchase was made before 1/4/2001. So the index number can be taken as on 1/4/2001. So 2001, 2002 index number is 100. The index number is 100. So 8 lakh into 280 by 100, 22,40,000. So long term capital gain we got 3,57,000. That's it. 3,57,000 is the LTCG. Now computation of tax liability. It is asking you not only to calculate capital gain but also to compute the tax liability. Now LTCG on sale of residential house. How much LTCG we got? 3,57,000. From this, the basic exemption limit for the current assessment year 2019-20 is 2,50,000. This point first time we are coming across, remember this. तो करंट असेसमेंट ईयर के लिए बेसिक एग्जम्पशन लिमिट इज 2,50,000. तो सब्ट्रैक्ट 2,50,000. दिस इज एग्जम्प्टेड. तो रिमेनिंग अमाउंट टैक्सेबल एलटीसीजी इज 1,07,000. Taxable LTCG long term capital gain is 1,07,000. On this 1,07,000, tax at the rate of flat rate of 20%. 20% is the flat rate of tax on long term capital gain. So 20% of 1,07,000, 21,400. To this add health and education cess. Health and education cess 4%. So 4% of 21,400 is 856. So total tax liability is 22,256. But according to the provisions of IT Act, the tax liability can be rounded off to the nearest 10. Tax liability can be rounded off to the nearest 10. So instead of 56, we can take 60. Instead of 56, we can take 60. 55 or more than 55, we make it 60. If it is 54, we make it 50. So nearest 10. So 56 will become 60. 22,260 is the tax liability after rounding up. That's it. So this is the explanation of problem number 6. Now I am reading out the problem number 7. See carefully. Mr. Vijay Raj purchased gold for rupees 5 lakh on 6th September 1989. Again, before 1/4/2001. And its fair market value on 1/4/2001 is 10 lakh. Actually, he purchased for 5 lakh. But FMV on 1/4/2001 is 10 lakh. So he will definitely choose 10 lakh. Then on 16th January 2005, he has ordered to make an ornament of the gold by spending 2 lakh rupees, cost inflation index 113. Initially, in the beginning, he has purchased gold. Later on, he has given an order to convert that gold into ornaments. So for converting the gold into ornaments, he has incurred an expenditure of 2 lakh. Now he is having gold ornaments. He is not having raw gold. He is having gold ornaments. So by spending 2 lakh rupees, the gold is converted into ornaments. So it can be treated as improvement. So we have cost of acquisition and cost of improvement. On 14th December 2013, he offered to sell this ornament to a businessman and received 1,50,000 as advance. So Mr. Vijay Raj has entered into an agreement to sell deed. In this agreement to sell, he has agreed to sell the ornaments and received 1,50,000 as advance money in the year 2013. On the agreed date of sale, the businessman negatived the sale transaction and accordingly the deposit forfeited. What had happened during 2013, the SSC Mr. Vijay Raj has agreed to sell this ornament to a businessman and has received an advance money of 1,50,000. Later on, the buyer refused to buy the gold ornament. Then the amount forfeited, advance amount given 1,50,000 is forfeited according to agreement. Now, according to the provisions of IT Act, if the advance money is forfeited before 1/4/2014. Remember the date. Before 1/4/2014, the advance money will be deducted from cost of acquisition. The advance forfeited will be deducted from the cost of acquisition if it is received before 1/4/2014. If it is received after 1/4/2014, this amount forfeited will be taken under income from other sources. This provision you remember. 1/4/2014 के बाद amount forfeit हुआ तो उसको income from other sources. If it is forfeited before 1/4/2014, the amount of advance forfeited will be deducted from cost of acquisition. Here in our problem, the advance is forfeited in 2013. That means before 1/4/2014. So this advance forfeited of 1,50,000 will be deducted from the cost of acquisition. And during the previous year 2018-19, the ornament sold for rupees 25,25,000 and selling expenses 25,000. So during the current previous year 2018-19, the SSC Mr. Vijay Raj has sold the ornaments ultimately for rupees 25,25,000. This is the consideration received. From this consideration, we deduct the selling expenses 25,000 and calculate the capital gain and tax liability. Again, we have to find out capital gain, tax liability. If the age of the SSC on the date of sale is 82 years, 82 years means he is a super senior citizen. Remember, super senior citizen means his basic exemption limit will be up to rupees 5 lakh, not 2,50,000. Non-senior citizen, it is 2,50,000. For senior citizen, it is 3 lakh. For super senior citizen, it is 3 lakh, it is 5 lakh. So here more than 80 years, super senior citizen, the basic exemption limit 5 lakh. And the income from other heads is 2,25,000. Income from other sources, other heads are 2,25,000. That's all. These are the contents of the problem. Now the solution will be like this. Computation of LTCG of Mr. Vijay Raj for the assessment year 1920. Consideration received 25,25,000. During the current previous year, he sold the ornaments for rupees 25,25,000. Let's transfer expenses 25,000, net consideration 25 lakh. From this net consideration, we have to deduct indexed cost of acquisition, indexed cost of improvement. Indexed cost of acquisition. Actually, the asset was purchased before 1/4/2001. So SSC has opted for FMB on 1/4/2001. FMB on 1/4/2001 is 10 lakh rupees. So here, indexed cost of acquisition 23,80,000 and indexed cost of improvement 4,95,575. Now, how we got these values, I'll explain you in the working notes. In working notes, how we got indexed cost of acquisition, indexed cost of improvement. I'll show it. So bracket denotes subtract. Bracket means minus. So we have to subtract 25 lakh minus 23,80,000 minus 4,95,575. So ultimately, long-term capital loss. First time we are coming across a situation where we don't have capital gain, we have capital loss. Minus में आ रहा 25 lakh minus 23,80,000 minus 4,95,575. You are getting minus 3,75,575. It is minus 3,75,575. This is the long-term capital loss. Negative. Now working note. The asset is held by the SSC for more than 3 years. So it is a long-term capital asset. This note we have to give to differentiate between short-term and long-term. In this case, the asset is held for more than 3 years. So it will be treated as long-term capital asset and gain arising will be long-term capital gain. The asset is purchased before 1/4/2001. So the asset cost of acquisition is higher of the following two amounts. First one, actual cost 5 lakh. Second, FMV on 1/4/2001, 10 lakh. Whichever is higher. So actual cost 5 lakh. FMV is 10 lakh. Whichever is higher. So 10 lakh rupees is the higher amount. Now, advance money forfeited before 1/4/2014. So it shall be deducted from the cost of acquisition. Just now I have explained you in detail. If the advance money is forfeited before 1/4/2014, it will be deducted from the cost of acquisition. What is the cost of acquisition? 10 lakh. 10 lakh is the cost of acquisition. So from 10 lakh, deduct 1,50,000, 8,50,000 is the actual cost of acquisition. Right? Now we'll calculate indexed cost of acquisition. Indexed cost of acquisition, 10 lakh minus 1,50,000, 8,50,000, we got it. This is the actual cost of acquisition. 8,50,000 into current year index. Current year index is 280. And the index number on 1/4/2001. 1/4/2001. That is 100. 2001, 2002. Index number for 2001, 2002 is 100. So divide by 100, we'll get 23,80,000. This is the cost, indexed cost of acquisition I have taken here. 23,80,000 is the indexed cost of acquisition. Similarly, indexed cost of improvement. Later on, in which year he has made the improvement, it is given here on 16th January 2005. He has ordered to make an ornament of the gold. So 2005, so 2004, 2005, 2004, 2005, the index number was 113 given in the problem. So here indexed cost of improvement is 2 lakh rupees into 280 divided by 130. So at the time of converting the gold into ornament, at that time the index number was 113. So 280 by 113, 4,95,575. That's all. Now lastly, tax liability. Super senior citizen, the exemption limit is 5 lakh rupees. Exemption limit 5 lakh rupees. How much is the income under other heads? 2,25,000. So 5 lakh minus 2,25,000, 2,75,000 is the still deficiency, because his income is less than the basic exemption limit. His income from other heads are less than the basic exemption limit. So there is a deficiency of 2,75,000. This deficiency can be met from long-term capital gain, but we don't have long-term capital gain. We have long-term capital loss. So here we have deficiency, here we have long-term capital loss. Therefore, his tax liability, Vijay Raj's tax liability for the assessment year 2019-20 is nil. No tax. So we have completed problem number 7. Now I am starting problem number 8. See the 8th problem. Sri Sadhuram is holding the following assets in his business for the last 23 years. So this SSC Sadhuram is running a business and he is using some assets in the business for the last 23 years. He sold all the assets during the previous year. It's a peculiar problem. The SSC is holding the business assets and he is selling all the business assets. The previous theory video I have explained you, if an asset which is a depreciable asset used in the business is sold, the gain arising will always be short-term capital gain, irrespective of the period of holding. Whether it is holding for more than 3 years or less than 3 years doesn't matter. When it is a depreciable asset used in the business, the gain arising will be short-term capital gain. So here, calculate capital gain and tax liability if income from house property is 84,000. So Mr. Sadhuram is having income from house property 84,000. Now particulars. See the problem. Particulars: building, machinery, furniture, land. The 4 assets he has sold. Book value 23,15,000, machinery 11,05,000, furniture 22,000, and building 1,20,000. Selling price, consideration received 35 lakh, 10 lakh 90,000, 30,000, 8 lakh 51,000. And selling expenses are 2%, 8%, 15%, 1%. Cost inflation index for all the assets in the year of purchase was 100. Cost inflation index will be required only for long-term capital gain. For calculating short-term capital gain, cost inflation index not required. And in the assets, 4 assets are given: building, machinery, furniture, land. In these 4 assets, the first 3 assets are depreciable. Building is a depreciable asset. Machinery is a depreciable asset. Furniture is a depreciable asset. Land is non-depreciable asset. There is no depreciation on land. It is non-depreciable asset. Never land and building is the depreciation. But only land, no depreciation. So we can treat the gain arising on land is a long-term capital gain. Whereas gain arising on building, machinery and furniture are short-term capital gain. So in this problem we have to find out the total income and the tax liability. Now see carefully. Computation of long-term capital gain of Sadhuram for the assessment year. Long-term as well as short-term. Because some assets long-term and some assets short-term in this problem. Particulars: building, machinery, furniture, land. Out of this, gain arising on building, machinery, furniture short-term, land long term, because land is a non-depreciable asset. Consideration received, this is the sale price. Sale price is given for all the assets. Transfer expenses are the selling expenses. It is given in the problem. Building 2%, so 2% of 35 lakh, 2% of 35 lakh come to 70,000. उसी तरह machinery 8% of 10 lakh 90,000, 87,200. Similarly furniture 15% of 30,000, 4,500. Land 1% of 8 lakh 51,000, 8,510. So we have taken transfer expenses. So consideration received minus transfer expenses, net consideration. From net consideration we have to subtract indexed cost of acquisition. We have to subtract for long term capital asset. In these four assets, one long term is there. Which is the long term? Land. The gain arising on land is long term because it is a non-depreciable asset, whereas these three are short term. When you calculate short term, no indexing will be done. Index numbers will not be used for calculating short term capital gain. In this case, from net consideration, we subtract the book value. What is the written down value of the asset, book value of the asset? So here in case of building, 34 lakh 30,000 is the net consideration, and the book value of building is 23 lakh 15,000. So you are going to get a short term capital gain of 11 lakh 15,000. So 11 lakh 15,000 is the short term capital gain. Short term capital gain on building. Similarly machinery, 10 lakh 2,800, this is the net consideration, whereas book value is 11 lakh 5,000. So 10 lakh 2,800 minus 11 lakh 5,000, you are getting negative, minus 1 lakh 2,200, negative you are getting. That means short term capital loss. There is a short term capital loss on machinery. Furniture net consideration 25,500, book value 22,000, 3,500. 3,500 is the short term capital gain on furniture. Now land. The net consideration 8 lakh 42,490. Now indexed cost of acquisition. Indexed cost of acquisition. So what is the cost of acquisition given in the problem? 1 lakh 20,000. The land is 1 lakh 20,000. Here I have calculated indexed cost of acquisition of land. So 1 lakh 20,000 is the cost of acquisition. Current year index number 280 divided by index number on 1/4/2001, 2001-2002. Index number is 100. So we'll get 3,36,000 is the indexed cost of acquisition of land. Subtract it, you will get long-term capital gain on sale of land. This is the long-term capital gain on sale of land. And this is the short-term capital gain. And this is short-term capital loss. That's all. Now in working note, you have to give the complete explanation. First, except land, all other assets are depreciable business assets. Hence, they are treated as short-term capital assets. The gain arising on building, machinery and furniture are short-term capital gain. Just now I have explained you. तो अगर कोई asset business में use हो रहा और उसके ऊपर depreciation allowed है, तो gain arising on those assets will be short-term, irrespective of the period of holding. Land is a business assets, but it is not subject to depreciation and it is held for more than 2 years. Hence, it is a long-term capital asset on land. There is a long-term capital gain. Now, transfer expenses, just now I have explained you. Indexed cost of acquisition, already I have calculated. Tax liability. Now, second part of the problem, tax liability. Now, see carefully. Short-term capital gain. So we are having short-term capital gain on building 11 lakh 15,000, short-term capital gain on furniture 3,500. So total short-term capital gain 11 lakh 18,500. From this we subtract short-term capital loss on sale of machinery. Here already we have calculated. These are short-term capital gain and this is short-term capital loss. The short-term capital loss can be deducted from short-term capital gain. Deducted. So total short-term capital gain is 10 lakh 16,300. This is the total short-term capital gain. Long-term capital gain on land is 5 lakh 6,490. Here we got. This is a long-term capital gain on sale of land. Now, income from house property. In the problem it is given income from house property 84,000 and short-term capital gain, just now we have calculated 10,16,300. You add up both income from house property and short-term capital gain. So 11,300,000, this is the normal income. See here, there are two types of tax, slab system and flat system. On long-term capital gain, there is a flat rate of 20%. 20% is the flat rate of tax on LTCG. Whereas this normal income, there is a slab system. Slab system. So on this 11,300,000, we apply slab system, and on this long-term capital gain, we are applying flat system. See here, slab income rate tax. How we are calculating the tax on normal income? Slab. First slab is up to 2,50,000. Up to 2,50,000 exemption, no tax at all. The tax rate is nil, income tax is nil. Up to 2,50,000. So up to 2,50,000, income is 2,50,000, rate nil, tax nil. The first slab completed up to 2,50,000. Next slab will begin from 2,50,001 to 5 lakh. 2,50,001 rupees to 5 lakh rupees. This is the second slab. So here I have written 2,50,001 to 5 lakh. So difference 2,50,000, 5 lakh minus 2,50,000, it comes to 2,50,000. So from 2,50,001 to 5 lakh rupees, the income comes to 2,50,000. On this 2,50,000, the rate of tax is 5% for the assessment year 2019-20. Remember, these provisions I am applying only for the assessment year 2019-20. So every year it will be different. So for this assessment year, these are the provisions. So 5% of 2,50,000, 12,500. Next slab, 5 lakh 1 to 10 lakh. From 5 lakh 1 rupee to 10 lakh rupees, the income comes to 5 lakh rupees. On this 5 lakh rupees, 20% is the rate. So 20% of 5 lakh, you will get 1 lakh. Now balance. After 10 lakh, यानी over 10 lakh, जितना भी रहेगा, उसके ऊपर 30% is the rate of tax. Now what is the normal income here? 11,300,000. तो total income 11,300,000. 11,300,000 में से first 3 incomes निकाल दो. 11,300,000 minus 2,50,000 minus 2,50,000 minus 5 lakh. यानी ये incomes अगर ले लेंगे तो 5 lakh plus 5 lakh 10 lakh. तो 11,300,000 minus 10 lakhs, you will get 1,300,000. The balancing figure is 1,300,000. On this 1,300,000, 30%, it comes to 30,090. Now take the total. The total is 1,42,590. That means on a normal income of 11,300,000, the tax is 1,42,590. Now tax on normal income, just now we have calculated 1,42,590. Tax on LTCG, long term capital gain, LTCG, यहाँ पर है, LTCG is 5,06,490. On this LTCG, 20% is the flat rate. So 20% of 5,06,490, it comes to 1,01,298. This is the tax on LTCG and this is the tax on normal income. Take the total, 2,43,888. This is the total tax. On this total tax, surcharge is not there. Surcharge will be applied only if the total income exceeds 50 lakh. If the total income exceeds 50 lakh, then only surcharge will be applicable. Here there is no surcharge. So plus health and education cess. Health and education cess 4%. So 4% of 243,888, 9,756 is the health and education cess. Now add up 2,53,644. According to the provisions of IT Act, the total tax should be rounded off to the nearest 10. Nearest 10. So here last 10th digit, what you are seeing, 44. So 44 means rounded off to 40 rupees. If it is 45 or more than 45, we would have taken 50. If it is 45 or more than 45, we would have taken 50. But if it is less than 45, we ignore the 4 rupees and we take 40. So 2,53,640. This is the tax liability of Mr. Sadhuram. for the assessment year 2019-20. So we have completed problem number 8.